G'day expats and welcome back to another episode of Expat Chat, episode 165 today, and we are kicking it off for the 2026 year. God, 2025 went so quickly. As always, I'm joined with my mate, business partner, mentor, colleague, all of the above, my co-host, Brett Evans, the managing director for Atlas Wealth Group over in the Europe, Middle East and Africa region. Good morning, Brett. How are you?
Good morning, James, and mate, all well here, and g'day, folks, and good to see you in 2026. I was joking to James before, saying how we'd just talk about little movie clips when was it The Hangover when the dentist starts singing "We're Back," and then you've got Independence Day with the drunk Vietnam vet pilot flying into So if we had the technology and the skills, we'd overlay that into the podcast right now. But we're good at
Yeah.
finance and tax, and we're not good at marketing and all those sort of little bits and pieces. So g'day, folks, good
Oh,
to see you again, and hopefully everyone had a great Christmas break. As always, joined by my mate and colleague from the Gold Coast, Managing Director for the APAC region, James Ridley. G'day, mate.
good morning, Brett. And you're sounding a bit croaky today. Sounds like you're shaking something off.
Mate, I was joking before, got a bit of Barry Manilow, a bit of, who's the other guy who plays in Las Vegas all the time, doesn't die. The Welsh guy. Trying to think what his name is.
Oh, I don't know. I don't
Anyway,
know.
yeah, got a bit of the man flu, so the ambulance is
Yep.
on standby downstairs. But as we said this morning, the show must go on. People want to hear from us,
Yeah.
and here we are in the first week of January, and mate, 2026. What have we got installed? I mean, we've had a big start with Venezuela, and
Haven't we?
just
Haven't
like
we?
we're just going to go and
Colombia's
nick the.
next.
Yeah, we're just going to go and nick this president, and I think
God,
Ayatollah Khomeini and all those sort of guys are probably looking over their shoulder
yeah.
right now, going looking for
Yeah.
helicopters.
Like he's got a wish list at the moment. He's got Greenland. He's mentioned Denmark before, and Colombia's next cab off the rank. He's just doing what he wants, and I think we all know it sets a dangerous precedent with China and Taiwan, and I guess a few other countries as well. So that's a wait and see effect. It hasn't really weighed too much, to be honest, on share markets or had an economic impact. If anything, it's probably going to decrease the cost of oil, if anything, given what they've just taken on. I think 2 billion barrels. I can't remember the actual amount. I think it's $2 billion worth of barrels, maybe.
Yeah.
But more recently, economic data that's come out was that November CPI inflation data, which went from 3.8 down to 3.4. But it's not sort of there. That's the monthly readout. We really want to see the quarterly readout. But I mean,
Yeah.
before we probably deep dive into anything
Oh,
further, we should
yes.
probably get the
Compliance.
little compliance jingle. Geez, we're sleeping on the job. I've
I
forgotten
know,
what we are
mate.
going
We're
to
not
say.
we're not match fit, are we?
So, I mean, it sounds like we just enjoyed our break too much. I was in Queenstown and I didn't want to come back, so I
No,
get it.
Queensland's a God's country. It's that place where
Yeah,
you really do switch off. But anyway, let's do the needful, as we say here in the Middle East. All the information that we are going to share with you, good folks, today should be treated as informational and educational purposes only. Please do not construe this as personal advice. If you do need to get personal advice, please speak to a specialist. Please speak to someone like Atlas who actually knows what they're talking about.
absolutely, man. And as I was saying before, uh, that monthly print that we got from the CPI in November, and the reason why I'm talking about this is we're going to talk about the RBA very soon, but it was only the monthly readout, so there's a lot that's not in that one. We get the quarterly inflation data on December, hopefully early next month before the RBA meets. And I think that's going to help set up the tone for the year around how the economy might track, what inflation's looking like, as well as what that means for the RBA and interest rate increases or cuts. And I think the RBA, we're at 3.6 today in terms of the cash rate. And I think we're going to float either zero point 0.5 up by the end of the year or zero point 0.5 down if inflation comes down by the end of this year. So that means that there's not going to be too much movement, to be honest, in regards to the interest rate throughout the year. And I just don't think that's going to really weigh too heavily on investment markets. If anything, if we go up by 0.25 or zero point 0.5, we know that our currency will go up a little bit against the US dollar. I think that's been expected, though. We've noticed that unwinding a little bit. We might see more interest rate cuts in the US, which means it'll weaken the currency. So keep an eye on that, especially if you're umming and ahhing as to whether you should be sending money home back to Australia, converting it to AUD, because even in the last, I'd say, 6 weeks, we've seen it wind up to 67 cents. So it's happening.
Mm.
It's going to happen. So later this year, we could finish off with 69 cents. We'll just have to wait and see what's going to be happening when it comes to all the geopolitical tensions around the world. What are your thoughts on how markets are priced at the moment, valuations, those sort of things?
Mate, equity markets, I think they're cool as a cucumber. It's
Mm,
when you look at the fundamentals, the underlying, and let's take the AI conversation out of the equation and look at
mm,
the rest of the 98% of the market. Um,
yep.
there's not too many bushfires and sort of storm clouds to be worried about. Obviously, as you pointed out, obviously oil. If Trump does get drill baby drill going on in Venezuela, oil production increases, that increases supply in the market. So oil and gas companies could come under a bit of pressure.
Yep.
But as you said correctly, that means lower input costs for production and everything else. So that'll benefit the industrial side as well too. So, I'm starting this year off mildly positive, I guess you could say. I wouldn't say bullish aggressive, but certainly dovish, that's for sure. From a returns point of view, it is going to really be a fractured market in terms of whether it's the FTSE, the S&P 500, the ASX 200, the Asia 50, all the different, the Hang Seng, and it's going to really place the importance of diversification, both from a equity market point of view, but also from a currency market point of view. You
Mm,
pointed out, obviously, with the interest rates being a key variable this year, that is really going to push FX markets around. And I think to me, I would say the laydown was there. If I had to, get the old Magic 8 Ball out right now and bet on 2026, I would say interest rates in Australia will be at or at the same level or higher in Australia by the end of the
yep.
year. I think it's a safe bet, 25 bips, maybe 50. Can't see
Hmm.
cuts coming, while Albo's spending money like a drunken sailor on shore leave. And that is going to, therefore, you could say the Australian dollar will be stronger through 2026, especially if the US Fed starts cutting rates.
Yep. No, I agree. And uh, yeah, you talked about the valuations and how share markets are priced at the moment. I agree with you. One indicator I always love to just check on every now and then, don't want to look at it too often, is the VIX. You look at the ASX VIX at the moment. A lot of time when you hear the VIX, people are mainly focusing on the US market or the S&P 500, and they're all relatively low. The ASX one, it's actually almost at a record low over the last year. And that just gives a good read of the volatility, but almost the fear factor within the market. And
Yeah,
if everyone's a little bit nervous, but they're not. It's the same with the US at the moment. Um, and I think that's mainly been driven by a lot of the earnings data that we've seen coming out. We are going to continue moving through into earnings season in February, especially on some of those larger companies, large cap out of the US. So that'll give us a good temperature on the last 12 months, as well as really important to focus on what the CEOs, the CFOs are saying about the next 12 months, cash flow, surplus cash flow constraints, where they're investing money. Remember, last year was a big year of, I guess, capital expenditure into AI, your
yeah,
data centers and everything you could do to try and create this AI god, right?
yeah.
It was the theme of the year, let's be honest. And it's hard to know whether that's going to be the same theme this year. I think it really will, but I think the really got to keep an eye on the capital expenditure and the ROI on that capital expenditure because it's a long person. It is a long-term game, to be honest, AI. Based on how long it takes to build all up these data centers and feed it all in and the attrition rate and all those sort of things. So I think there's going to be more of that. I don't think we'll see these huge returns again from the Mag 7 this year
No, I
because we
agree.
just had such a big run last year. I think growth is going to be a bit more moderated. And I think we might even see a bit of mean reversion, especially out of the S&P 500, to be honest, because that had a big year. Which just means, okay, well, when it comes to investing, review your investment strategy and be sure that you're not 100% in one market. Diversify. It's always important. Diversification is key.
Like we've seen with what's happening with Venezuela, and I guarantee there'll be 20 other things happen, in 2026. You can't time these things. There's no way that unless you do have a magic 8 ball, and if you do, I'll buy it off you. I'll give you a good rate. To me, it's very much about preparing, not preparing for the worst, but preparing for volatility while still committing to the path. And that's the funny thing how especially, I'm not a big person about putting LinkedIn posts about, okay, New Year's resolutions and all that sort of nonsense. To me, you either save or you don't. Just because it's January
Yep.
1st doesn't mean you start. You should just be doing it anyway. But what
Yep.
I find is people who are considering it slow on the uptake because they're waiting for all the stars to align in terms of the perfect opportunity. There is no such thing. If you
Ooh.
look at your portfolio in 2 years' time, I guarantee you couldn't remember what happened on the 8th of January or the 10th of January or the 15th of January when you started. Just start. And that's the biggest thing because what happens is life takes over, especially as an expat. It is a roller coaster ride as an expat, and you barrel through the year, and oh no, I'll do it over the Christmas, summer break in July, and then you're too busy, drinking mimosas and margaritas. The last thing you want to do is set up savings and stuff like that. So that's my one little bit for the folks out there. If you haven't started, start, and if you have started and you can do more because you get that compound effect. If you looked at this time last year, Trump was inaugurated, all the uncertainty going on. We had the Australian federal
Oh
election
yeah.
coming up and stuff like that, and we still made a buck. By December 31, when we blew it off the numbers, markets were up, pure and simple. So it's that year-on-year compounded growth, time in the market that creates true wealth. It's not timing in the market.
No, not by any means. Last year was definitely one of the biggest years of volatility. Uh,
It's huge.
Trump, tariffs, all the geopolitical tensions getting around. You had obviously markets wobble later in the year. Then we had a bit of a Santa rally as well. And, most diversified portfolios, if you're in the market for the full 2025 calendar year, you probably did anywhere from 7 to 12 or 13%, whatever it was, depending on, again, your exposures. I know that's probably the most common return that we saw in a lot of super funds. So being mindful of that, I think if you're thinking about 2026 and trying to set up your year, what should my focus be to make sure I'm having a good year? Well, right now, before we get too deep in the year, as Brett said, review your cash flow, look at your surplus, look at your expenses, or look at your income, look at your expenses, identify areas, especially of discretionary spending that you can wind back and start investing. I think updating your goals, you're not always going to have the same goals throughout life, and they tend to need to be updated every 12 to 18 months to make adjustments, maybe life events kicking into it and changing what your thought process is. I had a massive life event last year. We had our baby boy Harvey. So,
You did, mate.
changing the goals there for our family and starting to set up a bit of an investment account for him and saving for the future for him as an example. Checking the investment strategy. I think this is really important as well for those that might be retiring now or retiring soon. You can't ride the wave of aggressive growth or high growth into retirement, and it's really important to address, those risks that could come about when you're just starting retirement, such as that sequencing risk. So maybe consider a review bucketing strategy if you need to change some of your asset allocation or something along those lines. Tax efficiency. Are you being as tax efficient as possible? I feel like every year I have conversations with clients that have been with their accountant for 5, 10, 15 years, and they don't actually get any strategic tax advice from the accountant. They just
Yeah.
send what they've got and they get lodged, and that's it. And here's your tax bill, or here's your small tax refund. And often when I'm having my reviews with my clients, it's something that might come up. Or have you talked to your accountant about this? Have they brought it up? Have you reviewed the deductions that you claim? Have you considered, or should we now start to consider bringing to the fold a discretionary trust, or have we considered this? Uh, that's a common one. So we've just entered a new calendar year. So too late if you're in the US because you're in a new tax year right now.
What's
But
done's
this
done.
is the year that you dial in your tax efficiencies. Absolutely. Reach out to the accountant, ask for a review, ask for a strategy meeting, ask for a tax planning session, and see and make sure that you're extracting as much as you can out of your positions from a tax efficiency aspect. And then last but not least, I would say my last tip would be double check whether you've got an emergency fund. It's
Yeah.
a fund that just sits there. It's lazy capital, but it's a
Gathers dust.
necessary evil to have. That's it. So that emergency fund that you established 3 years ago or 5 years ago might not be the right amount anymore because your situation has changed. Your expenses have changed. If you're trying to understand, well, how big does the emergency fund need to be? Honestly, everyone's different and their pain threshold is different, but 3 to 6 months of living expenses, that's the emergency fund. It's lazy capital. It just sits
Mm,
there in another
yep.
account. You never touch it. But it's the rainy day fund. If something happens, you both lose your jobs within your household and you want to give yourself time to get back into the workforce, there it is. That's what it's there for, that rainy day fund. 3 to 6 months living expenses, unexpected events, very important.
No, spot on, mate.
That would be, yeah, some quick tips to set up the year ahead.
I think also too, coming back to your point about the tax planning and optimization
Mm,
side, you know, I love to see DIY investors and stuff like that. I think it's fantastic. And, there is a narrative out there that you should never pay fees or pay little fees as possible. And look, to each their own. There's a market out there for people who want to do it themselves, and there's a market out there people who want to delegate. Perfect. People choose. It's funny how people are so hellbound to reduce the fees as much as possible, but they leave the low-hanging fruit on the table, on the tree,
mm,
which is equivalent to 4 times the fees that they would have paid something else. And
yeah.
they're just focusing on fees. Don't just focus on fees. Focus on the whole perspective of your portfolio. A month wouldn't go by that we don't meet people who done a great job managing themselves and stuff, but very quickly you can point out, what would be equivalent to 5 to 10% equivalent fee in the tax side that they're not picking up on. And they're like, oh, I didn't know
Yeah.
that. It's like, yeah, you're sitting here trying to save 1% fee, and in actual fact, you've blown a heap of extra money just by being micro focused. You need to be
Yeah.
holistic when you look at your wealth and go through everything and not just look at it from the cost point of view, but also an optimization point of view, because there's so many options out there for folks, expats in different countries. Um, each country has their own peculiarities and different rules and stuff. But there are options and availabilities out there.
Yeah. Yeah, absolutely. And I mean, in terms of the Atlas Wealth Group and what we've got on our itinerary for the year ahead, it's going to be a
A
big
lot.
year, isn't it?
It's a lot.
Yeah.
That's a
A
lot.
lot. I think you're going to see us in a lot of different countries. I think
Mm.
that's probably going to be a common theme. So we'll be jet setting around, hosting our master classes, our EDU master classes, which we can't wait to bring to a city near you. There'll be plenty of webinars going on. The team will be growing. So keep an eye on the socials, keep an eye on those updates. Big year, big year ahead.
Yeah. And we're also rolling out in April, May this year, a little book. So that will be coming out. Keep an eye on your emails. If you are registered with us on the newsletter side, we'll be sending out some information on that over the next week or
Mm,
two.
mm,
But first of its kind, when we're working with Wiley's, the publishers who did Barefoot Investor, Andrew Hallam's book and stuff like that, and they loved it because it fits in between the Barefoot Investor and Andrew Hallam's Expat Millionaire. And the reason
mm.
being is it talks about Australians and Australians and Australians and Australians. Whereas
Just Australians, that's right.
Andrew's great because he talks about, you know, investing as an expat, but it covers Canadians, Saffers, Yanks,
Oh
the whole
yeah, all of
lot.
them.
Whereas
Yep.
we sort of go into a bit more detail on that side of it. Um, Scott Pape does a brilliant job with Barefoot Investor, but it's domestic focused.
Mm,
So a lot of it, not a lot of it, a big portion of it doesn't apply to expats because there's different rules and regulations that apply. So yeah, so keep an eye out. We'll start getting noisy with that. Pre-sales can start happening actually anytime now. But
mhm.
yeah, we'll get some more information coming out over the next couple of weeks, and very excited to get that out there because the whole purpose we do the webinars, the seminars, the podcast is to have that broader conversation with expats. And,
Yeah.
sitting back in 2025, we're like, okay, how do we have a bigger conversation? We know we're not a client. Yeah, everyone's not a client for us. We get that. And that
Mm,
doesn't bother us at all. But if we can at least steer a big portion of the expat population in the right direction to get good outcomes, we've done our job. So people will come to us as clients, people won't, doesn't matter. But if everyone in general has a better understanding by the end of 2026 than they did in 2025, and they have a bit more knowledge, knowledge is powerful. They're not getting caught in
absolutely.
tripwires and landmines. Um, then we're all benefiting at the end of the day. So that book is very much a passion project. Trust me, you don't write a
Mm.
book because you've got spare time. We got no spare time anyway. But I've never actually, you have these ideas and from the movies and stuff, what publishing a book is like. It's nothing like it. There's like 15 different people involved. You got, sort of editors and copy editors and this, and there's titles of people I didn't know existed in the world. But great work to the publishers out there for all the work you guys and girls do. But it's pretty cool. Yeah, we're very proud of this. It's a very much a cradle to grave type of a scenario for becoming an expat, living as an expat, and returning to Australia as an expat. And I think it's something that people are going to really resonate with because we've just broken it down into that sort of layman's type approach. Okay, you're about to go overseas. This is what you need to know. You're living overseas. This is what you need to know. You're coming back to Australia. This is what you need to know. Lots of checklists in there. That's an
Mm.
important part because people love a good checklist. They love that affirmation of ticking things off, and you can do that in the book. So yeah, very excited about that. That'll, I said, I think Wiley said, the global launch is April, maybe May. I don't know. We'll send more details out when it comes available anyway.
Yeah, very excited coming to obviously a bookstore near you, especially if you're in the airports. So can't wait for that one.
Yeah, and look, if you do see it in the airports, take a photo and tag us in it. That's pretty cool. To me,
Yeah.
when I've had these conversations for 15 years of Atlas, I've always said, especially in the early phase of meeting with clients and getting the business going, there's no book you can buy at the airport that tells you what to do as an expat. Um, as for 2026, there will be.
Yeah, exactly right. Many more years to come in the future as well. I'm excited.
Definitely, definitely. So, mate, I think we wrap it up there. I think we just wanted to get on early. It's funny how there's a lot of podcasts we follow, and it's very quiet at the moment on the old playlist. So we wanted to get out there and say, hey, we're back, we're here. Cue the Hangover dentist singing, we're back, and look forward to being of service to you guys out there in expat land. For 2026.
Absolutely. Thanks for your time, Brett, as always. And guys, we look forward to bringing you another year of plenty of episodes, exciting news from the Atlas Wealth Group. Stay tuned. See you on the next episode.
Cheers. Thanks, guys.